NXPI Semiconductor is set to release its earnings report on November 4th, and analysts are watching closely. Should you buy or sell before the announcement? Hello everyone, before starting video, important info. This video is AI generated and created purely for informational purposes. Welcome to Infotech Stocks channel, earnings ahead to buy or not to buy NXPI. This is the question on every investor's mind as we approach the earnings season. NXP Semiconductors or NXPI is on deck. This company has been a significant player in the semiconductor industry, providing essential components for a wide range of electronic devices. They report earnings on November 4th. This date is crucial for investors as it could set the tone for the stock's performance in the coming months. Should you buy the stock now? That's the million-dollar question. Timing is everything in the stock market, and making the right move at the right time can lead to substantial gains. We're diving deep into NXPI to help you make that call. It's all about timing. Understanding the company's financial health, market position, and future prospects is key. Buy before a good earnings report and you could win big. A positive earnings report can drive the stock price up, rewarding those who invested early. But a bad report? That's a different story. A disappointing earnings report can lead to a sharp decline in stock price, causing significant losses. We're talking about your hard-earned money here. Investing always carries risks, and it's essential to weigh the potential rewards against those risks. So let's get this right. Making an informed decision requires thorough research and analysis. We'll break down NXPI's prospects. We'll examine their recent performance, market trends, and future growth potential. We'll look at the good and the bad. Understanding both sides of the coin will help you make a balanced decision. Then, you can decide if NXPI belongs in your portfolio. Are you ready? Let's do this. With the right information, you can make a confident investment decision. Inside NXP's numbers, a look at Q3 projections. Analysts are expecting a lot from NXPI this quarter. They're projecting revenue of $3.25 billion. That's a 5.3% drop compared to last year. Earnings per share, or EPS, are expected to be $3.43. Remember, these are just projections. The actual numbers could be higher or lower. That's the name of the game. We'll see what happens on November 4th. The market reacts to surprises, good or bad, so buckle up, it's going to be a wild ride. The recent past charting NXP's performance. To understand the future, you gotta look at the past. NXPI's performance has been a bit bumpy lately. The semiconductor industry has been facing headwinds. These include supply chain issues and slowing demand. But here's the thing. NXPI is a leader in its field. They're focused on key growth areas. These include automotive and the Internet of Things, or IoT. The question is, can NXPI overcome these challenges? Can they deliver strong results in a tough environment? We'll find out soon enough. Driving forces. What's impacting NXP's earnings? Let's break down the factors impacting NXPI's earnings. There are several key areas we need to consider. First up, the automotive sector. This is a critical market for NXPI, and it plays a significant role in their revenue stream. This is a huge market for NXPI. The automotive industry relies heavily on their technology. They supply chips for everything from infotainment systems to advanced driver assistance systems. These chips are essential for modern vehicles. The good news? Demand for cars is still strong. People need their wheels, and the automotive market continues to grow. The bad news? Supply chain disruptions are still a problem. These disruptions have been a significant challenge for the industry. This is making it tough for car makers to get the chips they need. The shortage of semiconductors has caused delays and increased costs. Next up, the Internet of Things. This sector represents another massive growth opportunity for NXPI. The Internet of Things is transforming how we live and work. They're well positioned to capitalize on the growing demand for connected devices. NXPI's technology is at the heart of this revolution. Think smart homes, wearables, and industrial automation. The possibilities are endless. From smart thermostats to automated factories, NXPI's chips are everywhere. As more devices become interconnected, the demand for NXPI's products will only increase. This trend is expected to continue for years to come. In summary, while there are challenges, the opportunities for growth are substantial. NXPI is well positioned to navigate these waters and continue its upward trajectory. The automotive edge. NXP's grip on the wheel. NXPI is a major player in the automotive chip market. They've got a strong foothold in this space, and they're not slowing down. They're investing heavily in research and development. Why is this a big deal? The automotive industry is undergoing a massive transformation. We're talking about the shift to electric vehicles and autonomous driving. NXPI is at the forefront of these trends. Think about it. Electric vehicles and self-driving cars need more chips than ever before. NXPI is ready to meet that demand. They're in the driver's seat and they're going full speed ahead. The IoT explosion, NXP's connected future. The Internet of Things is exploding. It's connecting everything around us. From your refrigerator to your wristwatch, everything is going online, and NXPI is cashing in on this trend. They make the chips that power these connected devices, and they're doing it better than anyone else. They're focused on low-power, high-performance chips. These are essential for IoT devices. The IoT market is still in its early stages, but it's growing rapidly. NXPI is well-positioned to benefit from this growth for years to come. The macro lens tech spending in uncertain times. We can't talk about NXPI without talking about the macro environment. The global economy is facing some challenges. Inflation is still a concern. Interest rates are rising. And there's a lot of uncertainty in the air. This is impacting tech spending. Businesses and consumers are being more cautious with their money. They're delaying big purchases, and they're cutting back on non-essential spending. This is something to keep in mind when you're thinking about NXPI. The macro environment could impact their earnings in the short term, but in the long term, the fundamentals of the business are strong. The pre-earnings gamble, risk versus reward. So, should you buy NXPI before earnings? That's the million-dollar question. There's always risk involved in buying a stock before earnings. You never know what's going to happen. If NXPI beats earnings expectations, the stock could soar. But if they miss, the stock could tank. It's a gamble, plain and simple. Only you can decide if the potential reward outweighs the risk. Do your research, look at the numbers, and make a decision based on your own investment goals and risk tolerance. The long view, NXP's potential in the years ahead. Despite the short-term challenges, NXPI's long-term potential is bright. They're a leader in key growth markets. They have a strong track record of innovation, and they're well-positioned to benefit from the trends shaping the future of technology. The automotive and IoT markets are only going to get bigger, and NXPI is at the forefront of both. They're developing the chips that will power the cars of tomorrow and the connected devices of the future. If you're looking for a long-term investment with growth potential, NXPI is worth considering. They're a solid company with a bright future. Wall Street's take a mixed bag of opinions. What are the analysts saying about NXPI? It's a mixed bag. Opinions are divided and the sentiment is far from unanimous. Some analysts are bullish on the stock. They see potential for growth and believe that NXPI has strong fundamentals. They believe NXPI is well positioned to weather the current economic storm. With a robust product lineup and strategic partnerships, these analysts are optimistic about the company's future. Other analysts are more cautious. They point to the volatility in the market and the unpredictable nature of the global economy. They're concerned about the impact of the macro environment on NXPI's earnings. Factors like inflation, interest rates, and geopolitical tensions are all weighing heavily on their minds. They're also worried about the ongoing supply chain disruptions. The semiconductor industry has been hit hard by shortages and delays, and NXPI is no exception. As always, it's important to do your own research. Dive deep into the company's financials, understand its business model, and consider the broader market conditions. Don't just listen to what the analysts are saying. Look at the numbers, understand the business, analyze the trends, and make sure you have a clear picture of the company's potential, and make your own informed decision. Investing is as much about understanding your own risk tolerance as it is about understanding the market. So what do you think? Are you swayed by the bullish analysts, or do the cautious voices give you pause? Is NXPI a buy, sell, or hold? The decision ultimately lies with you, based on your own research and investment strategy. Let me know your thoughts, share your opinions, and join the conversation. Your insights could help others make their own informed decisions.